Good morning, everyone. Welcome to the Commodities and Currencies podcast. This is Manish Sharma, joining in as fundamental research analyst into commodities and currencies. So let's start with the current week's updates with the bullions complex first. What we saw was bullions lost their festive sign in the last week. We have seen that the prices tumbled from record highs and slapping a 9-week rally in the gold, where a stronger dollar and easing geopolitical tensions amid falling global prices triggered profit booking moves by the investors. On the MCX, what we saw was gold futures for December delivery plummeted by almost 2.8% to close at around 1,23,451 per 10 gram in the December futures contract. Silver futures have also fallen by profit taking moves, with the December contract crashing by almost 5.83% to settle at around 1,47,470 per kg levels. Both the metals have been on the rise since the week ended August 22, where silver had risen and outperformed gold on a monthly perspective. The overall trend, however, still remains positive on a longer term basis, but prices needs to sustain above 1,22,000 on the M6 futures contract, with potential upside targets could be seen around 1,25,000 to 1,25,200 levels. However, we see that a breach below 1,22,000 on a weekly basis could invite a further correction up to 1,20,800 levels. The key support levels for gold would be around 1,22,000 and 1,20,800 for the current week, while resistance can be expected at around 1,24,800 and 1,26,000 on a weekly basis. Talking about silver, the immediate support levels for silver would be placed at 1,45,000 and 1,41,000 on a weekly basis, while the resistance could be around 1,54,700 and 1,56,000 for the current week. The trend remains cautious for silver, as short-term consolidative moves and pullback cannot be ruled out before the next upward move resumes for a longer-term basis. Overall, what we can see is the trend for the gold and silver is expected to remain with a consolidative and to cautious bias for the current week. We also see the Federal Reserve all important interest rate decision coming out this week, where the Fed will announce its monetary policy decision on Wednesday, and markets are expecting a 25 basis point rate cut fully priced in. And also the tone of the Federal Reserve chair will be closely scrutinized for further indications of rate cuts in the coming meetings. Now, let's move ahead for the base metals complex. Recent broad-based rallies have been seen across the base metals, but overall, the fall in the gold and silver prices and bitcoins and other cryptocurrencies also have been stalling, and the momentum in US equities have also been seen cooling. So now the investors' focus could shift to base metals, as we have seen that aluminium have emerged as a standout last week, up 4% and breaking also above that crucial $2,800 per ton levels on the LME. Zinc's historic backwardations have also eased after the LME inflows, but it is signaling only a potential retracement. Inventories could continue rising, but that will drive only towards a short-term pullback in the zinc prices. Copper have risen 3%, and lead and nickel have also risen 1 to 2% in the last week, where copper remains vulnerable to dollar strength, but US equities cautious trend and ample inventories could also keep upside slightly limited for the copper prices. Now, copper could advance towards record highs nearing $11,065 per ton, where optimism over a potential US-China trade deal could ease the global growth risk. Reports suggest that Trump's tariff threats are off the table, but Beijing will pause rare earth export control. The rally up 25% year to date in copper is supported by persistent mine disruptions. Near-term momentum, however, may hinge on the confirmation of the trade deal. Talking about the technical levels, copper currently closed at around 994.6 last Friday on the MCX futures contract, where the supports are expected at 985 and 975 on a weekly basis, while on the higher side, we can expect resistance in the prices at around 1005 and 1020 levels on the higher side. For LME, the resistance on the higher side could persist at 11,085 and 11,200 levels on a weekly basis. Now, let's move ahead for the energy complex. WTI crude oil, where it rose 7.6% last week to $61.5, where Brent climbed also towards $65.63 per barrel levels last Friday. Both quantas have gained about $4 for the last week, where this is the strongest rise seen since the mid-June. Prices have surged because the US, UK, and the EU sanctions on the top Russian oil companies like Rosneft and Lukoil have disrupted up to 5% of the global supply, prompting Indian and Chinese refiners to pause purchases also. Further support came from the larger US inventory drawdowns and the DOE's plan to buy 1 million barrels for the SPR, underscoring tightening supply and strong demand. The outlook. In the short term, we can see that Rosneft and Lukoil have tightened supply as Indian and Chinese refiners also pause their Russian crude orders, supporting the prices alongside US inventory drawdowns and SPR replenishment. Renewed backwardation in WTI and Brent reflects the risk premium and expectations of tighter near-term supply. However, the long-term impact may be limited as Russia has historically bypassed sanctions via shadow fleets and alternative routes, with China and India likely to resume imports once logistics stabilize. Overall, the sanctions are also boosting prices now, but it may fade in the influence if Russian exports recover through informal channels. $62.5 remains an immediate resistance for the crude oil, where a breach of this level may push prices towards 64.5, 66.5 levels. Now, talking about the currencies, global currencies could adopt a cautious stance this week as investors are positioned for a pivotal week featuring a highly anticipated meeting between the US president and the Chinese counterpart for a closely watched and also closely watched Federal Reserve rate decision due this week. Markets are hopeful for a trade breakthrough in the US-China deal, while also that basically the interest rate decision could yield a 25 basis point rate cut. And the US president is also expected to meet the Japan's counterpart for further trade negotiations. And overall, the rupee is expected to trade range bound for the week, which will be capped by the RBI interventions and month-end flows, while volatility is expected to persist towards the weekend. So this is all about the commodities and currencies podcast. I hope you have gone through these updates and we wish you a very successful trading week ahead. So thank you very much.